The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, that rocking tune means it's time once again for the Option Block, everyone's favorite source for a little bit of options wit, a little bit of options wisdom, some analysis, some education, throw in a dash of some, let's say, inanity, for lack of a better word, and mix it all together in the crazy cauldron, and you get the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call this here Options Insider Radio Network. Hard to believe it's already our third show of 2014. We're just cranking away. Really, really excited to dive into the fun stuff we have in store for you today. Joining me on the program today, starting off with the man beaming in from Casa Jacobson, wearing the bunny slippers and the smoking jacket. He's taking over for Uncle Mike in that regard. He is none other than the Viceroy, a.k.a. Alex Jacobson from Options Express. Mr. Jacobson, welcome back to the program, sir.
Hey, Mark. Good to be here today.
Love that deep, thick Skype tone you have today. I'm telling you, we need to turn Casa Jacobson into the new home of the show. It just sounds so good when you beam in from there.
If I could get quotes, at least the parking is a lot cheaper up here.
I know a lot of our listeners would love it, too, if you could beam in from somewhere outside of the OX firewall. It would do our listeners some wonders. But that's a debate for another day. Joining us also on the program today, the man who is just knee-deep in the joy that is heat-fitted skates. And if you've ever had those, listeners, you know how great that joy is. None other than Andrew Giovinazzi, a.k.a. the Rock Lobster from OptionPit.com. Mr. Lobster, welcome back to the program, sir.
Pleased as punch to be here, to be invited back every week, week after week. It's almost like we planned it or something. I can't really believe it every week. I still get the call. Rock Lobster, what are you doing? Mr. Option Lobster.
It's like Oprah making the cover of her magazine every month. How does that happen? Time and again.
I don't know how it happens. Like, it's so consistent. It's crazy.
I wonder if Oprah is surprised every time they show up to her door and say, you're on the cover. Like you're surprised every time I toss it to you at the beginning of every show.
I know it. And what's amazing is the listeners are still surprised that I'm surprised that you toss it to me at the beginning of every show.
They're like, really? Really? He brought that guy back again? We thought 2014 was the year we were finally free. All right, and joining us a little bit later, listeners, will be none other than Uncle Mike Tusaw. As usual, getting a late start on the day, but better late than never, because it's time to dive right on into the trading block.
The Trading Block.
All right, if you've been listening for a while, you know what those bells mean. They mean it is time for the Trading Block, the portion of the show where we break down the day's worth of action on the old street. And wasn't a heck of a lot of action really to break down today. It was a bit of a unched day across the board. S&P closing up not even a full handle today, so essentially unched on the day. The Dow closing down about unched as well, and the NASDAQ closing down about a quarter of a percentage point or so. So not a whole heck of a lot. VIX cash not really ticking up much either. Pretty much unched is the way you could describe the entire day, at least from an index perspective. But when you're looking at some of the individual names, there was a little bit more going on. First off, we're kicking it off finally today with some earnings love. Alcoa announcing after the bell. We are, of course, recording this, listeners, on January 9th. You'll be hearing it on the 10th, so bear that in mind as you listen to the show. And Alcoa not yet out. We touched on them a little bit on the last episode. Not exactly a huge options name. Trading closing today $10.69, so not exactly a big name for options premium, yet doing some decent numbers today. They've been averaging about 40,000 contracts a day, did 150,000 today. So there was some love for Alcoa today, including nearly 12,000 of the Jan 11s going up, the weekly Jan 11. So a lot of action on that near out of the money upside call strike. We'll pay attention to Alcoa a little bit and see if actually looks like they may have already come out. Looks like they're down off about 20 cents. So hopefully everyone on that 11 strike was writing the hell out of that strike. We'll pay attention to it a little bit and see, and we'll see what's going on a little bit later. But of course, the big news today, at least from an individual name perspective, from an options perspective, certainly was Apple. A little bit of going on out there, and who better to join us to discuss the goings on in Apple than none other than Uncle Mike Tusaw. Mr. Uncle Mike, welcome back to the show, sir.
Oh, always happy to be here. Always happy to be here. Out in St. Charles, we actually invest in actual apples. We don't invest in the actual company itself. We're not that advanced.
Yeah, and they quote Apple out in St. Charles. It's by the bushel, is it not?
Pretty much, yeah.
I'll take 6 bushels of them are apple.
That sounds about right.
Did I get that St. Charles accent right? It's kind of hard to nail down, but I try. Of course, the action I'm referring to in Apple wasn't a whole lot of a price action per se, even though it did close off a little over 1% today. But the really, really interesting stuff we've seen over the past couple of sessions really was the earnings debacle. And I always joke with Uncle Mike about, oh, this is the earnings date and my minions and this and that and the birdies. And I always tease him, get him a little nervous that he doesn't really know what the earnings date is. But that literally came to fruition this week. A lot of people, a lot of platforms have been expecting Apple to announce on the 23rd. We saw that price built into the options premium on those weeklies. Everyone building in some really, really nice earnings juice into those weeklies that expired on the 24th. And then what happens, they go and announce, actually they're announcing on the 27th. Weird when you announce the announcing date, but c'est la vie. So what did that do? Not a whole heck of a lot from an equity perspective, but from an options perspective, now that entire weekly cycle is essentially worthless. So we saw all that premium move out of that 24th weekly cycle into the end of the month weeklies, and as a result, those that third week weekly slew out there in Apple just got annihilated. The implied vol getting crushed across the board, down as much as 50%, I should say, in some of these contracts. We saw a lot of the at the money and near downside puts on the weekly cycle in the 24th, losing about half of their premium pretty much overnight as a result of this move. So pretty big development from an Apple options perspective. Uncle Mike, did this catch you unawares? Did this result in you maybe not doing some of your, I know you like to do some of the ratios with the week 1 and week 3 and that kind of stuff. Did this throw a wrench into any of that?
Well, it's ironic. I made a decision going into this earnings that the long option with which I was going to use was going to be the January option, the Jan week 3, the week before it. And I was going to make a decision next week exactly how I'm going to just get set up for the hedge. And the reason was I didn't want to use the week 4 premium. I didn't want to pay that astronomical amount of money because of the fact that I'm going to be I'm using a longer-term option for the macro hedge, so to speak, the doomsday hedge. So with that, this kind of benefited me. It really was. It turned out not to be an issue, and I was right to do that, but not for this reason. I was right, but for the wrong reason, if that makes sense. And with it, typically what I like to do what I'm likely going to be doing going into this earnings announcement coming up now on, was it February 14th or something like that? Or who knows, whatever. What I'm likely going to be doing is this is going to be a back spread earnings play for me, and that most likely, I mean, I'll make the decision next week, but I'm likely going to be bringing out the back spread. I haven't played that game in probably about a year and a half. But this is one to where I think we're going to get some movement out of this earnings report. And who knows, I could be wrong, but I might be bringing out the old back spread again. For now, thankfully, that didn't affect me, because it's not nice to tell people when when Apple earnings are one day and they're really another day. That's not a nice thing that you do to people, Mark.
Yeah, I was going to say, this seemed like they took a play right out of my book here by completely throwing a wrench in you, just to mock you. Someone at Apple and their investor relations team has obviously been listening to the show, and they decided
that's what I think it is.
It's pretty funny to mess with that earnings date. Let's try that out and see how all those diagonals work out for Uncle Mike.
Well, for those of you executives that are doing this at Apple, didn't faze me, by gosh.
Yeah, I know it seems like weekly ratio calendars and diagonals have kind of been your tool du jour of late. So it seems like you were spared by
1 week.
Yeah, pretty much. Andrew, did this catch any of your mentees over there unawares, and was there any interesting stuff developing over there as a result?
No, if anything, we had a couple guys I think like just some butterflies, some really wide ones. So I think it kind of helped. Like, 40-point flies, iron butterflies, and stuff like that. So I don't think it was a bad thing for them. They just came in. Oh, well, the premium's gone. Oh, that's nice. Close. So just again, for the opposite reason, a position where you're just looking to make a little and somehow you get lucky and make a lot, I guess. So.
I think this is an important lesson for all of us, and I always joke about, fluctuating earnings dates, but a lot of traders take those dates, even the predicted ones they see in various platforms, as kind of like they're written in stone, and that is the date, and they trade around it, and usually it works out pretty well, but on the occasions like this where they throw a wrench into the works, that could be disastrous. If you bought any premium in that weekly expiration cycle, that's pretty much gone. You got crushed. And you're right, Andrew, if you had some spreads that had legs that could take advantage of that, then it worked out all right. But just completely by the roll of the bones, as they say, for that worked out for you or not. Alex, I'd imagine this caused some interesting calls over there at OX over the past few sessions. Would I be correct?
Yeah, it did, and it generated a lot of traffic and generated a fair amount of trading. And of course, to your point, Mark, the data company puts up is the expected earnings date. There is nothing in securities law that makes them stay with that date, and we kind of learned that lesson early on when we built the earnings part of Hub. And had to put all kinds of disclaimers in it saying that it was the expected date and the dates can change. And you'll get customers who, were trading for the expectation of earnings on the 23rd who were kind of like, asking the desk today if maybe they could roll them and shave a commission. And, of course, the desk will, always try to work with you on this stuff. But there's a lesson here, and we learned it, last year with Google when they came out early. They came out at 10 o'clock in the morning and kind of surprised everyone. And people on the wrong side of this then are, writing the emails saying that they violate some SEC rule. And it's not an unfortunate circumstance, but no, they didn't violate any rule. And mistakes happen. Sometimes it's just a mistake. It's not a grand conspiracy, although I know people oftentimes like to think that it's some kind of grand conspiracy, but they just move this and they're entitled to do that.
Yeah, we put a lot of stock in those dates, and we see those little disclaimers that legal makes you put in saying, oh, this is an estimated date, blah, 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 blah. People take that with a grain of salt. There's disclaimers on everything these days, so they kind of just blow by that information. But it's there for a reason in this case, and it seems to have worked out. Of course, I think for a lot of the listeners of this show, it might have actually worked out in their favor. I'd imagine just from all the listener interaction we do and talking to them. A lot of our listeners of the show fall into the premium harvesting, a.k.a. the dark side camp. So this actually may have worked out in their favor with this premium just imploding like that. Of course, if it all rolled out to the next week out and you didn't have, maybe you had a short on out there or something like that, could have bit you. But I'm wagering that the lion's share of the audience that's trading Apple in this show fared pretty well as a result of this. So maybe we shouldn't be too mournful in our analysis of this. But anyway, interesting stuff, and certainly something to keep an eye on when you're trading these products and trading around these dates as if they're set in stone. I mentioned Alcoa at the top of the trading block there, and they are out now. They closed at $10.69. That weekly, looks like that weekly 10-half straddle went out at about 55, nearly 60 cents, and they're off about 30 cents. So pretty much about what you expect from Alcoa. Nothing really blowing the doors off or anything like that. They're down trading 10.35 in the after hours. So there you go. There's our resounding kickoff to the earnings cycle. That's what's going to jazz up the market, Andrew, and bring all the vol back. Alcoa, you're seeing it right now before your eyes.
I don't know if that's going to do it. You're asking about question is like, what's going on? There's no volatility in the non-farm payroll number. And I think, let's ask Mike or Alex, but I think that's the first time that's happened in 2012. Or I'm sorry, 2013 and through a good part of 2012. Where I actually had even with the market was down about, let's say 0.75% at one point today. I had the VIX up a whopping 2 cents. VXX up 6 cents. That is no volatility going into this number. Like the last NFP number we had, I guess that was the big one that tipped everything into the taper. But, we had volatility up point and a half easy. And the VIX, and this is like nobody cares. It's almost like things are going to be back to 2004.
We joked a little bit on the last show that there wasn't much vol creeping in, but that was, of course, on Monday. I think all of us assumed there'd be maybe a little bit of buying frenzy, particularly by the time we did this show and the close on Thursday here. And yet, not the case. If you're going to see any action, it was going to be in the close today. Anyone putting on something ahead of the number tomorrow. And yet, yeah, you're right. Pretty much, as I like to say, a resounding meh from a shrug of the shoulders from the market. They just don't care about non-farms. And it was always right. You're right. It was always good for a little bit of a boost of something, even in all the other days when it was pretty much written off and everyone was focusing on other issues. And non-farm was kind of like an afterthought. It still had a little bit of juice, particularly on days when it would come on expiration and things like that, and that made it a little more exciting. But yeah, nothing at all today, which is
VIX closed on the dead low. Nobody cares.
If anything, that gives a little more credence to your single-digit vol prediction coming in the very, very near horizon. Because if there's no juice for any of this, no juice for the start of earnings. Granted, it's just Alcoa, but still, no juice for that. No juice for non-farms. I think we're looking at a very, very slow Q1 at least from a vol perspective. But certainly not from an unusual activity perspective. And it's time to highlight all that because it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is, of course, where we break down the funky and the unusual, and sometimes it's just darn outright strange paper we're seeing going up in the options market over the past few sessions. Going to kick it off today. A lot of you are asking, can't you do ones where you see after the open interest, you can see exactly what's going on? Well, that's what we got here. Starting off with a review of some activity we actually profiled on the site a couple days back on January 7th. and it was kind of intriguing, so we thought we would hold off on it for the show today. This was just a frenzy of call activity in a little name, Plug, Plug. This is Plug Power Inc. This is the name that usually does a couple thousand contracts a day if they're lucky, and they've just been lighting up the tape. Back when we did this outline on the 7th, they did, 1,000 contracts alone in just the June 5s. We saw someone lighting up, just in the one trade we highlighted, someone buying 950, I should say, June 5s, prices 50, 55 cents. That was probably closing, but then we saw another nearly 11,000 contracts going up on that strike by the end of the day. Today is no different. They're just lighting it up and Plug again. We saw nearly 15,000 of the Jan 4s going up, and then we saw a total today of 55,000 contracts going up in Plug. So, Andrew, walk us through the odyssey that has been the last few days of activity out there in Plug.
Well, the stock is basically making like 10 to 15% moves a day, I guess. Oh, today was 27%.
Yeah, today was down 27%. I should have probably mentioned at the top. Off about $1.25, 27%.
Yeah, because it traded 4.5. Actually, traded 4.95 yesterday. So it's like, I think there were some people a little too short it, and they're done covering. But here it looks like there was some profit taking on the Jan 7 trade that we looked at, and I've been seeing, like, it looks like a lot of profit taking, like people just bought calls and the stock just exploded from the mid 2s to almost 5. So obviously you buy some calls that can be profitable, even though Alex just says just go buy the stock. So I've started selling some puts in this thing, actually, full disclosure, but
selling puts into the teeth of a 27% drop. There you go. I like it. Little bit of aggressive doing stuff.
You could really sell puts still way out of the money in this. I don't know.
Are you selling the 50-cent put, Andrew? Are you drawing that line in the sand?
Ooh, he's going to be a client pretty soon. This is how I get clients, folks.
Let's just say it is a reasonable portion of my risk capital. Let's just put it that way. But at least in this particular case, there's just been a lot of buying. There's a story there. They're starting to sell their fuel cell technology. They're getting orders. They're getting revenues. It's kind of becoming a company. What's it worth? Who knows? But in this particular case, definitely people look like they were taking some money off the table.
Yeah, this is a provider of alternative energy technology focusing on design, development, and commercialization of fuel cell systems for the industrial off-road, aka forklift and material handling. That's a niche market. Power cells for forklifts. Wow.
Now, I think they're starting to do something with, like, they got big contracts with somebody. Now I guess, they hit some revenue targets for the quarter. So, apparently their technology is working well enough, as an alternative to gas and things like that. So, very speculative stock, though, hugely.
Yeah, I mean, look at it. This the Feb 3s for a stock that's trading $3.32. They'll pay you 50 cents to sell those Feb 3 puts. So yeah, there's some juice in them. There are hills out there.
There is.
So maybe this is one to keep an eye on. Yeah, so when they're trading 50 cents, we can come back and check in on it. Right. But yeah, interesting. Fuel cells seem to have been the it thing every couple of years for the last decade. Maybe this is finally the time, and maybe that's what they're just waiting for, that niche forklift market to really make them take off.
Yeah,
of course.
Well, we'll see what happens. I might become an owner of this stock. It's not a lot, though.
There you go. You're not just a long-term investor. That's all.
That's what else we got on the yacht block?
We got. Yeah, well, it's that time of year. It is CES. It is the big consumer electronics show. So the odd block would not be complete without a big name in consumer electronics, perhaps more of a formerly big name in consumer electronics. We're talking about BlackBerry today. This is the name. Actually had a bit of a boost today, up about 2% to $8.72. This is the name that of late has been trading about 90,000 contracts, so it's doing some decent volume, despite the fact that everyone's saying they're done, they're toast, and doing about 83,000 today. So it wasn't so much the volume that caught our eye today as much as what was going up. And it was actually, people have been talking, the narrative has been down, 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 put buyers out in BlackBerry for a while. Today, that script seems to have flipped a little bit. We saw a boatload, that's a technical term, a boatload of the March 7 puts getting essentially blasted out. When we wrote this up this morning on the site, we saw a total of 18,500 of the March 7s going out for about 28 cents. Open interest of 12,000 contracts. That was all open in paper. By the time it was all said and done today, we saw nearly about 26,000 of these puts going up. So this is size paper for BlackBerry. And went up, marked as sold, but it looked like it was lifting the offer. Again, another reason why I take those descriptor tags with a big grain of salt. Looks like it could have been tied to stock. I don't know, Andrew, did you dig up any more on whether that was tied the rest of the day?
I think it might have been a tied to stock trade.
That's how it looks, doesn't it?
Yep. It might have been buying, like it went up, sold last, but I think there was a tied to stock trade way over the open interest. And I just think somebody's buying puts and stock in it, which is in March. I mean, I could see that as a trade if you really think it's going to take off. But it's almost at that deal price. Remember $9 takeout? I believe, the price a couple of months ago before it traded to $6. So, this company still, I don't know if it's just a lot of Canadians that buy the stock when it gets to $6 or something.
Molson and BlackBerry, they got to buy it.
But that's what it looked like. I think it's there for whatever reason. The way I see the put volume was somebody's looking for a big move. If they did it with stock, they're looking for the move up or just anywhere. So, looking for a fairly big move. And the volatility came in too, which is, again, odd. Another reason why it's on the odd block. Pretty sized buyer, vol coming in. I just think there's this guy's positioning for a move. That's what I think.
I haven't been paying too close attention to what's been announced at CES, but to my knowledge, I haven't seen any big announcements that are lighting up the candle there from BlackBerry. That would make me want to load up on a bunch of March 7 calls, essentially. But, hey, who knows? Maybe this guy is seeing something that I don't. Either way, he's drawing a pretty big line in the sand here on BlackBerry. An aggressive trade. Interesting one. This is definitely one we're going to file in the to be watched to see if BlackBerry is still around by then and if this guy actually is swinging for the fences.
If it's trading 11, we'll be, oh, wow, I guess he was right.
Yeah, he was a genius.
Do you know what's coming out of CES that's interesting, and maybe it's just coincidental with CES, but there's a price war starting between T-Mobile and AT&T.
I did see that, yeah.
And if Verizon gets involved in this, I mean, they are knocking the costs of entry down at a phenomenal rate. I don't know if it gets traction. I don't know how those companies are going to stay profitable.
And that's been the one big thing that everyone's relied on to keep customers sticky, right? Are those early termination fees. They've been jacking them up. And everyone's kind of waited for one person to take that first foray into, hey, we'll pay your termination fees. Because you're right, then it sets off a whole crazy aggressive war. And T-Mobile, nothing else to lose. They have no customers. We'll pay your fees. So now it's off to the races. It'll be interesting to see if that keeps going.
Yeah, it was funny to see AT&T come into there. And longer story on another podcast. But this is, I mean, a genuine price war. These are big numbers they're throwing around.
So is it time to get a new iPhone? Should I get rid of my old phone and get a new one? Mine's getting it's so old, it's getting so slow. My kids can't play Angry Birds on it anymore fast enough.
So who's your provider?
Phone, AT&T.
Okay, so AT&T right now, if you re-up on some plans, is giving you $120 to re-up in the first year per phone.
Wow. That's exciting.
By the way, Andrew, can I just say you revealed you dated yourself there when you called it phone.
Oh, I know.
If you weren't on the SIBO decades ago or any other place, that's what the old timers used to call it. I'd trade phone. That always cracked me up. You couldn't add tele. That was too much work. But yes, T-Mobile off to the races on that news. Just a huge...
Not making any money? Oh, I guess they are making money.
Yeah.
They're getting customers.
They're getting customers. The money comes later. First, you get the customers.
This is going to be fun to watch this year as it plays out.
I do know the T-Mobile CEO crashed the AT&T party at CES and was tossed out by security. So they're making waves left and right, any way they can to get headlines. Buying customers, getting tossed. Interesting stuff. The stock on a tear as a result. So maybe that'll be one we'll be seeing in the odd block pretty soon. We're going to wrap up the odd block here with two quick. It seems like rolls were the trade du jour today. Were they not, Andrew?
It did look like it. This is a stock I followed for a couple years when I thought it was overpriced at 5. However, I didn't short it. I just thought, wow, this is an expensive stock, LNG. And now it's
certainly overpriced now.
$46. Freaky. That's all I can say.
Yeah, he's talking about is that Cheniere? How do you pronounce it?
Cheniere Energy.
Cheniere Energy. LNG is the ticker symbol. Closing today, $46.27.
This might be a Kramer stock. I thought it was at some point as a nat gas play. I think they own the rights to build. I think it might be built by now. A natural gas hub where they can export, which I think would probably be a lucrative business at some point. When they start exporting natural gas.
Yeah, that's the big deal, sending it off to those markets where it's ridiculously overpriced.
Yes. And that would be great for me. I would love that to happen anytime soon. But the thing here, this trade is the roll. This call roll was like huge. This guy has made, I think, a ton of money doing this. Where he sold out the March 40 calls for $760. And Cheniere is trading near a all-time high. And he doubled down and bought more. He bought 20,000 of the April 48 calls. No open interest there. So he's just taking his money and rolling it right on back in. So I thought that was pretty impressive. It looks like he's taking some money off the table, but, definitely looking for higher prices. And it's hard for me to figure out what the value of this franchise will be at some point, but apparently this guy has been right or girl, and they're looking for higher prices.
Yeah, this guy's nice to be playing with house money at this point. Keep rolling onward and upward. It's the Uncle Mike Tusaw trading philosophy.
Well, it's once you're at the house money. This stock was $20.70 at the beginning of the year, and I thought it was expensive then, but nope. Hasn't made a nickel.
Your frame of reference has changed now, sir. Now it's cheap.
Yes, exactly. And the company still has not made one nickel, but I guess they got a lot of assets.
Oh, must be a Web 2.0 company. All right, and we'll close it out here with another big roll here in American Realty Capital Properties, another name I check every day as soon as I wake up. Ticker symbol ARCP, closing today, essentially unched on the day. Is the name that does a whopping, about 1,300 contracts a day, doing about 11,000 today. The bulk of that, about 9,200 contracts, coming in a pretty sizable Jan-March 12-half roll, went up 4,600 times. Open interest is about 8,000 in the Jan and non-existent in March, so clearly he's rolling on out. Looks like he bought March and then sold the Jan, so it looks like he's just kind of doing what we saw in the other name, kind of rolling onward and essentially the same strikes, not upward, but rolling on at the very least. That's your take as well, Mr. Andrew?
It is. I don't think he did as well as the other guy, though.
Yeah, when you're rolling to the same strike, it's kind of a hallmark that you're not really knocking it out of the park yet.
Right. Well, when you're selling the calls that you're long for parity, it's not for 15 cents. But, he could be right. I mean, just trying to scoop some of these REITs and all these other companies that the herd just sold like crazy in 2013 when interest rates were going back up. They're like, we can't have these companies anymore that just, pay me 5 or 6% yield. Everybody hit the road on them. Now they're yielding a lot more.
This was this guy telling his risk manager today, give me one more quarter. Come on, give me one more quarter.
Exactly.
And so that's what he got. He got one more quarter to make his home run and try to chase his buddy out there who's lighting it up in LNG. All right, that is going to do it for the old odd block today. Now we're going to keep on rolling ourselves right on into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody. This is the portion of the show where I toss it to the Viceroy, and I really look forward to it on these days when he's beaming him Casa Jacobson, because the Express Block just sounds so fantastic. I really look forward to listening. And Alex, my minions, my birdies, they've been kind of frozen in last couple of days, but now they're starting to thaw out a little bit. The polar vortex has moved on. And my minions can give me little scattered bits of information here and there from throughout the frozen wasteland that is Chicago. And a few of them have been telling me that you guys have been working fast and furious over there at OX on harvesting some premium. We talk about it all the time in the equities, but, there's premium to be had in other areas as well, including the futures option. So are my minions correct? Have they earned their delicious jams and jellies today, Alex?
Your minions are spot on. You must have a contact at the NSA. But, premium harvesting for futures. We worked on it much of last year. It was supposed to roll out October, November, and it got caught up in some of the development kind of backlog that you always have at an e-commerce discount broker. There's always new technology, and there's always this kind of arm wrestling for who gets resources, and end of year stuff just required more resources than were available, so it got bumped a little bit. But sat in the meeting this morning. We're very close to being ready. There's still some more legal language that's going to have to be attached to it, but it will be premium harvesting for futures options, initially starting with 4 underlying contracts: the CL, the light crude, the gold contract, the E-mini S&P, and the E-mini NASDAQ. And if by chance somebody is listening from the CME, please give me an electronic option in the big S&P. But right now it's just the E-mini. Should be later this month. So it will, in fact, be the 5th tile in the Idea Hub. One caveat, it will only be available to futures-enabled accounts. So if you go into Idea Hub and you're a securities customer, you'll be able to see the tile. But when you click on it, it's going to say, whoa, you need to have a futures account. And for many people, that's not really a big deal. You just continue clicking. And you could open the account online, especially if you have an existing account. But we're very excited because of the growth we had last year in futures options. We talked a couple shows ago about, that 2013 was a decent year in securities options, and kind of hedged that a little bit by saying, but a lot of the volume came out of weeklies, and that's real volume. That's good. But futures options just had dynamic growth industry-wide last year, and as more and more names become available, the liquidity in a handful of the names is very, very good. The liquidity in many names is getting better, but we should see that later in January. Maybe it'll slip to early Feb. I had to go take the CFTC tests, so I'm now futures licensed. So I am able to talk about it. We'll start webinars on it as soon as it clears. The other thing going on today, interestingly, is we're still seeing tax selling We're still seeing people who did very, very well last year that are harvesting some cash out of some of the names that have done well. And another interesting comment I had from the desk this morning was they saw a lot of activity in small cap biotech and technology. And I'm not sure if that's people starting the year out wanting to make aggressive or speculative bets on what they think will be coming this year. Biotech had a really good year last year, but that's what was lighting up the phones and keeping us busy at OX today.
Thank you for that, Mr. Alex. And now we're going to keep on rolling right on into one of my favorite parts of the show, really, because it gives you guys a chance to sound off. Of course, I'm talking about the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, as usual, I want to thank all of you guys for writing so many great questions. I know some of you have been waiting for a while. Sometimes it takes a while for us to get to these, but keep on writing. You can, of course, do it a lot of different ways. Post your comments on theoptionsinsider.com. Send us an email, questions@theoptionsinsider.com. Find us on Twitter, twitter.com/theoptionsinsider, or on Facebook. Find us on Twitter, twitter.com/options, or find us on Facebook, facebook.com/theoptionsinsider. No shortage of ways for you guys to get in touch with us. I think we got pretty much one from every platform represented here today, or we try to anyway. So kicking it off here from a tweet from Zaire Rahman, Zaya68. Pretty basic one. I normally wouldn't highlight this one, but he was so polite that I had to just do it because I reward people who are nice and polite in asking the questions. He writes, what would be a good place to learn about options trading? And then he followed up with good evening and happy holidays. And so I thought he was so nice about it. I had to answer him. But of course, I wrote back to him. I said, give us a little more info, what you're looking for. And he wrote back and said, interested to learn the basics on options trading, stock and index futures, and then also a discount broker to trade. Well, luckily we can help you with pretty much all of that there, Zaire. First off, it really depends on how deep you want to go. If you want to kind of start, you're listening to a show like this, I'm guessing you want to get your feet wet a little bit in the options space. You're starting to learn about these products a little more. Great places to start that are free. I don't hate to toot our own horn, but hey, the Options Insider, we've been doing it for 7 years now. We have 7 years worth of free content built up there on a variety of different topics. And I know it can be kind of overwhelming to some of you newcomers coming to the site for the first time. It's one of the things we're working on for 2014 is to make some clearer paths. So if you come into the site for the first time, you want to learn about options, you go here. You want to learn about premium, income generation, that sort of thing, you go here. We're working on those paths for you. But in the meantime, you come to the site, a lot of different tabs you can click on, of course, the education tabs. We're starting this new options FAQ, the frequently asked questions that a lot of guys like you, the beginners of options, have. We're going to start answering those in more detail. And of course, if you have a specific topic, just go into the search bar at the top of the site, type in covered call, type in you want stock, index, futures, whatever the case may be, type it all in there. We'll have a lot of that stuff there. Great place to go, completely free, and you can kind of get your feet wet. Of course, a lot of other shows there you can listen to, including the 300 odd episodes of this program, a huge archive. If you sit down and listen to all those, it's going to take you a while. It's going to take you about a month. But if you go through all of those, as well as some of our other programs on the network that are more educational based, you can really, really get a good good footing in the option space. Of course, when you want to graduate, get on to the next level, of course, you can check out guys like the Option Pit and stuff, where they have some courses that they can walk you through stuff and specific examples of things. When you have a better idea of what you want to learn in specifics, those guys can help you. And of course, a lot of people, I think, overlook what is offered these days. I mean, I say Alex is the major domo over there at OX Education. A lot of people overlook what the brokers really have to bring to the table. You go sign up with an account with a broker like OX. I know you're looking for a discount broker. Clearly, we do a show with OX. We kind of like them, so they're a good recommendation for that. And if you go and open an account over there, you get access to all of this educational material that is really, when we talk about the webinars they're doing all the time, all that stuff is free. So you're really getting just a ton of stuff, ton of extra bang for your buck on top of it, on top of, the actual trading tools that you get. A lot of people don't really factor that into the value equation. You're getting all those webinars, all that, talk about a glossary of material over there. Click on the OX Education tab. You get a lot of good stuff there as well. So if you're looking for places just to kind of get your feet wet, those are great places to do it. Not going to cost you a dime, except for opening up the account. You're going to get a little more sophisticated. Then you call up a guy like Andrew and Mark, and they'll walk you through some sophisticated and prepared coursework that can walk you through specific examples of how to trade things like flies or credit spreads or whatever the specific thing is you want to learn. Alex, Andrew, Uncle Mike, anything you want to add to that?
I would just add a couple of things. Number one, the two big Chicago-based exchanges have great bodies of work on education, both the CBOE and the CME. The OCC has, again, an outstanding body of work. You can go to Options Education, I think it's .org. The other thing I would recommend is open a virtual account. It doesn't take any money, and you can practice trade in it. You can come to Options Express, and where it says open an account, you can open a virtual account. So you don't even have to put any money in it. You can see almost all the tools. There are a couple of tools you can't get access to, and that's compliance-related issues. But you can practice trade. You can do flies, write covered calls, sell puts, just do stock. And I think if you can road test the car before you buy it, why would you not take advantage of that opportunity? So as to discount brokerage, I have two favorite names, Schwab and OX. But you can virtual trade here at OX. And I would suggest starting there. I'm going to say something that's going to create a little animosity, but I wouldn't buy a book. I know there are a lot of terrific books out there, but most of the people I've known over the years who buy option books end up not reading them. I think you can learn a lot more by playing with the flight simulator, and that's the virtual account.
That is an undersung tool, I think, the paper trading. And it doesn't cost you anything to open up one of those accounts and start trading that. So if you want to just open up an account at OX and then kick the tires with the tools and the education and then see how some of these things perform in real life with fake dollars, that's a great idea. And you mentioned the OIC. I neglected to mention them when I was talking about them because I was looking for what they announced today, and that was this. Actually, good timing for your question there, Zaire, because OIC just announced this morning a new initiative they're calling the Options Education Program. OIC is, of course, the Options Industry Council. They're kind of the gold standard when it comes to free options education. And this Options Education Program is going to bring together all of their educational offerings, including webinars and courses and this customized curriculum, all kinds of stuff, even podcasts, some of which they do on our network. You can check out the wide world of options that their retail instructor, Joe Burgoyne, does on our network. So you can check out all this kind of stuff that they have. You can learn more at optionseducation.org. Surf on over to the Options Insider and click on that news story to read more about that. All right, so great question. A simple one, but you can get into a lot of interesting stuff in the weeds. All right, next up on the old mail block, we have a question from someone just goes by the name Jack. Interesting one, getting into the tax realm. It is that time of year. People thinking about taxes. And he writes, I know you guys are not tax advisors. And certainly we are not, Jack. So nothing you say can be taken as certain in any answer to this question. I'm a small-time trader and at the moment cannot afford a CPA with trading expertise and options to do my taxes. So I'm wondering if you can talk about the potential tax consequences of front spreads, particularly when used as a covered call replacement. I've had good success with this strategy and would like to move into my margin account this year instead of just using it in the IRA to avoid the tax headache. Thanks, Jack. Interesting question. Looking at it on the surface of it, covered call, obviously just long equity, short call, front spread, aka the ratio spread. We talked about that on a recent show as well. You're essentially long 1, short 2. I'm not sure what kind of ratios he's doing, maybe 1/3. I don't know. He says he's doing this in lieu of the covered call, so I'm guessing he has no underlying there. He's just doing all options. So if you're talking swapping in a ratio 1/2 type spread for a long underlying short option type strategy, I don't know if there's a heck of a lot of difference there from a taxable event perspective. Of course, a lot of our listeners, a lot of people take these things to expiration. If you take it to expiration, you just, in the covered call scenario, you're just essentially transferring the stock out at the strike price, a couple of taxable events there, and you're done. In this case, if it rallies through, you let it go to expiration, you're getting short some stock, so there's an added component there. And of course, it depends on how much of the ratio you're doing, how aggressive it can get. But not really on the surface of it, that I can think of anything that really, sets the two apart dramatically in terms of a lot more taxable events. I mean, there might be some, I don't know, Alex, you think they qualify for any of this straddle consideration? Doesn't seem like it to me.
depends on the products he's using and what else is in the portfolio. So it does get a little complicated, and I'm not sure without knowing what the products are and what else he holds on the taxable side.
Yeah, that's the problem with these kind of questions, Jax. We really need to know your specific consequences or your specific situation to really deal with this. Uncle Mike, you must deal with a lot of tax situations over there. Anything you want to say for our buddy, Mr. Jack?
Yeah, too many tax situations. In terms of doing a front spread, a lot of times I've had clients to where instead of doing a covered call, maybe they're a little bit more aggressive on the stock. XYZ stock's at 40. Instead of selling the 45 call along with owning the stock, they'll do the 40, 45 1x2. And then you do a front spread that way. So kind of and if they do that at zero cost, it's kind of their way of creating double leverage, so to speak. In terms of taxes, yeah, probably would need more information on it. Based on the fact that you said you're a small-time trader, I'm not able to confirm this, but if memory serves, the CBOE has a product, XSP, X-Ray Sam Paul. It's like the mini SPX to where you can still get the 60/40 tax treatment on. Is that correct? Do you guys know anything about that? But just off the top of my head, that's the first thing that's coming to my head.
Yeah, it still exists.
Okay, got it.
I did 100 contracts today.
Okay.
So it's not exactly.
I didn't say it was liquid. I said it still exists.
You might pay a little bit in spreads to get in and out of this one, but it does exist.
Oh, there you go. So that's the only thing if you're a smaller trader and you want to do something like the SPX, but you're not able to do the SPX, then maybe that's a thought, and your volume can create a trend, perhaps. Who knows?
All right, thank you for that, Jack. Sorry we couldn't really be of more help. Like you said, we're not really tax advisors, so we're limited in how deep into those waters we can go. We'll wrap it up here with a question from Ian Getz. He writes in time to time. He writes, "Ad options, I'm curious how you find good options-related articles on the general internet with such a generic keyword as options. Any tips? Articles on the general internet with such a generic word as options. Any tips?" This is an interesting question. We had to tackle this when we first launched Insider 7 years ago. You can imagine how bad it was, how bad it is now. Imagine how bad it was then. You type something like options into Google and you get options to invade Iraq and all kinds of crazy stuff. So we had to deal with this very early on. If you've been to our site ever, you know we have that news ticker that we built, and that was done by design. When we launched the site, we had that ticker, and so we had to tackle this right away. How do we find stories? And what we ended up doing was doing a lot of work with tools to filter this stuff. So we had a lot of keywords, and you're right, you can't just use a generic options keyword. You really have to add a lot of descriptive tags onto that. And then with the Google search tools now, it really made it easy for you guys to do this at home. We had to do this with a lot of, design a lot of tools to do this back then, but now you can do it at home. If you create a Google account with a lot of Google keyword, related type alerts, then you can put in keywords for things that you like. If you want covered calls, if you want options premium, you can get as specific as you want with those alerts because they'll only send you the links and the articles when it actually pops up. So if you want to know about deltas in Apple, or if you want to know about, premium harvesting in Oracle, whatever the case may be, adding those descriptors, iron condors, in BlackBerry, you can put all that stuff out there, and that will just dump it into your account. So I suggest you set up a nice little Google account you probably just use just for this, and let it dump these related searches in as they pop up, and you get these alerts. You can configure it to go to your inbox and things, so you'll get them popping up as soon as the alerts come in. You can say, "Oh, here's an interesting story I want to check out, maybe on iron condors and Apple," and kind of go that way. But you're right, if you just go the generic route of, "Hey, I want to know about options," this is probably not going to serve you very well, unfortunately.
I have one other suggestion.
Go for it, sir.
One other. And so let's say you look on our website or Mark's website, there's a blog roll there. So at least from that point of view, you can see, okay, well, these are the guys that write about option trades. And you can say, okay, well, these are all the people on Mark's website. Then it gives you at least a resource of, we'll just call them more reputable type of articles about options. That way, you're getting, it's vetted in a way that, we only allow people on our blog roll that we like, or we see their material and we think it's pretty good. So that could be a secondary source of information for you and, good articles on the internet.
Yeah, not to toot our own horn, but this is a lot of horn tooting in this episode, it seems like, for Options Insider, but that's kind of one of the things that we designed the site as a service to do. We wanted to curate news and articles for you guys out there for you to make Options Insider kind of your reputable repository for options information. That includes in-depth articles and analysis on usual activity, and also we have the news ticker there where we actually do a lot of this for you. We will filter out a lot of the interesting options news. Now, granted, it's not by ticker or things like that, so if you want something specific on Apple, you have to kind of go do that yourself. But if you want kind of the lay of the land of what's the big stories coming into the options and derivatives world today, then that ticker will certainly serve for that. And, of course, you can subscribe to individual blogs and things like that, too. And we pull a lot of that stuff in as well at Insider, so you can kind of get all that as well. So a lot of good places you can go for reputable stuff. Just like you said, add some descriptors to those keywords if you just go on the keyword route, because otherwise you're in for a world of hurt and a world of dubious information. All right, that's about all the time we have for the show today. We went on long with the mail block, but we like doing that sometimes because you guys write in with so many great questions. Didn't even get to all of them today. We'll get to some more in the next episode. Before we go, let me check in really quick with each of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods, starting with you, Uncle Mike Tusa. What is coming up in the land of RCM Asset Management?
This Wednesday night, the 15th, we're going to talk about the weaknesses of the weeklies, and actually in small words we'll say and strengths. So we're doing a webinar on the weeklies, and this is just basically the last year and how it's changed my life as a trader in general with multi-week options. We'll be going through that the following Wednesday night. So tune in, folks.
So would one of the weaknesses be when the company moves the earnings date and sucks all the juice out of that week? Is that a weakness?
I might have to make an addendum to the slides I already made up.
I like that one. It might be a good weakness to factor in there. All right. Speaking of weaknesses, Mr. Rock Lobster, what's cooking in the land of the pit, sir?
In the pit, we have our bear market trading strategies webinar on the 25th. That doesn't mean I think we're going into a bear market, but since we are at we'll just call it a relative market high, it's probably a good idea to learn about these type of strategies for when you might need them, which right now you don't. And also, Mark is doing a SIBO webinar on volatility and the VIX, which is very good. And that will be that's on the SIBO tomorrow. You have to go to the CBOE website though, and find out about that.
I like it. Maybe we can teach that to some of the financial advisors out there, so they can actually be prepared when this bull market eventually does turn, and they're not just long equity all day, which they all are. Not to be cynical. Not to be cynical or anything. All right, and last but certainly not least, Mr. Viceroy, what is cooking in the land of OX education?
A full calendar of webinars. I'll just showcase a couple of them. Monday, the 13th, we're doing a platform and site tour showing many of the new tools. Tuesday, the 14th, two products that people are anxious to know more about. The Walk Limit, the industry pioneer in that product. Walk Limit does electronically what an intuitive trader would do. And then Tuesday the 14th, I'm going to do a hub webinar. That one will just be securities options, index, and equity options. But keep an eye out for futures options when we get the site up.
There you go. Another great example of all the great education that is offered to the OX clients. So check it out. If you're looking for more education over there. And, of course, if you'd like to join your fellow listeners on the mail block, a lot of great ways to do that. I hit on them before. Questions at theoptionsinsider.com, twitter.com/options, facebook.com/theoptionsinsider, or just go to theoptionsinsider.com and leave a comment. A lot of great ways to get in touch with us. We'll look forward to hearing from you. On behalf of Andrew and the Viceroy and Uncle Mike and, of course, myself, I want to thank all of you guys for downloading and streaming and, of course, for writing in such great questions. Keep them up, and we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.